Are you ready to rock?
I'm ready to go. Let's start.
All right. So as we continue to push for our mortgage company to have more options for you guys, we have Peter from Anchor Loans on with us. He will go over some of the offerings that they have, mainly for us. Again, a big push is going to be from agents to investors. And um, if you guys are wanting to do this yourselves or have clients that are investors and you're wanting to have a different product for them, then this is going to be your chance to listen to what they have to say. Um, our our competition right now is going to be our wholesalers. They're coming in and getting the business or a lot of business from agents, and so we want to be able to compete with that. And if we can jump in and do our own either wholesale or fix and flips or cash buys or have more options for these sellers than just these wholesale lowball offers, then that is our angle. So again, Peter is with us. And so Peter, you want to go ahead and give an intro of who you are and how you guys work with Anchor?
Sure. So my name is Peter Kankowski. I've been with Anchor Loans for about 2 years. I've worked in all different areas of lending, credit, originations, operations, loss mitigation, default, foreclosure, everything. And I've done quite a bit. Up until about 2 months ago, I worked in our home builder division, which is subdivision lending for build to rent or build to sell, single family townhomes up to, we say 200 million, but we've gone higher than 200 million. We also do some multifamily in that group. And I've just recently moved over back to the origination side on what we call our RTL, the residential transition lending, which is basically a long way to say single family lending mostly. We do bridge acquisition or stabilization or recap loans up to 80% on a rate and term refi basis. We also do the traditional fix and flip. We divide that into standard fix and flip, which can be done in 12 months, and a extended extensive renovation, which may take a little bit longer, permits, like if you're adding an ADU or adding a square footage or raising the roof or whatever, if it's more extensive, then that would be an extensive renovation. And then ground up construction, which is, my baby. I prefer to do ground up construction. I've done a lot of that in my career, where we can, take a single family lot and build a house. We can do single family, one unit. We can do small lot subdivisions. You see a lot of that in LA, where it's like they divide a lot up into 10 townhomes or, or a little bit larger. And also we can do multifamily. Our bread and butter is, 2 to 4, but we also can do up to 20 units on a case-by-case basis. And that can be either as a multifamily or as units to be sold.
Right on. Yeah. So, and a fun fact, and I wanted to get you this totally side note. You were formerly at One West prior to something else prior to that. And I had a lot to say back when this was all going down with IndyMac Bank. So, what's your take on Mnuchin?
Uh, he is a quirky guy. He was definitely a quirky guy.
All right.
I
I'm
actually
not
had
kidding.
dinner with him a couple of times, and he, he was smart, obviously smart,
Yeah.
very smart guy. But yeah, he came in after the IndyMac
Uh,
debacle,
Debacle and
and
then
I
crushed it with
met
all the other
him and
executives.
his guys from Dune as they took over, and it became One West. So yeah, I was through all of that, through
Yeah.
the FDIC, through all of that. So
So for those of you guys that don't remember IndyMac was going under, and all their top executives started One West Bank and then took all these assets. We're getting assets 10 cents on the dollar and then getting paid by the government to buy all these assets. And it was just an interesting way to see things unfold when the collapse was happening. Everyone that should have gone to jail was making billions of dollars. It was pretty awesome coming from the small guy side. But total side note, half kidding.
and I didn't make any of that. Otherwise, I would be working, believe me.
All right. So, and part of what we're doing right now is I am running as a little guinea pig through Anchor right now. I have my project going in Wildemar that I'm working through. My next project is going to be a single family home, so I'll run that one through as well. And so a little bit different than what we're probably talking about on our side as far as realtors are concerned. But what the big thing for me is, again, competition for wholesalers, right? And so being able to offer these investor loans. And with that, so Peter, when it comes to our market, you're dealing a lot right now with wholesalers. We actually found you from one of our buddies who's a wholesaler. Go through some qualifications or how you're some rates and terms for a fix and flip loan, or what's the easiest way to get into this market?
So at Anchor Loans, and the one thing I didn't say when I talked about our offering is that our loans are strictly business purpose. We don't do any consumer loans, no consumer, build their dream home. Unfortunately, we don't do that. I've done a lot of that in the past, but this is strictly for business purpose. So unless they've got a builder who's going to acquire title and has the experience and will build it for them and then flip it back to them, it's generally going to be only a business purpose type loan. And so what we look at is 80% of the business we do at Anchor is repeat business. So once we get it down, and I keep telling Craig this, once we get it down, it's really pretty easy to do the second and third and fourth deal. The first one can be a little bit sketchy, just as we start to document. But if you fill out an application, it's good for a year. If we, approve you to do business with us, it's good for a year. And the way you get approved is they have a matrix, and it's pretty simple. It's basically credit score and number of units completed driven. So it's not, on the Access, it's if you've got a 720 credit score, that's top of the line 720. And then if you've got at least 10 units completed, you're a tier A, which qualifies you for the top tier in terms of leverage and pricing, et cetera. And then on down from there, the minimum credit score is, I think, I don't do too many of them, but I think it's like a 620. And, like today I had someone who had absolutely no experience. Their credit score was 720. It turns out it's a bridge acquisition. And so they're being tiered as a tier C, which in terms of maximum financing, they're down 10% from our maximum financing because they're a tier C. And as I told them, if they do 3 deals with me, the fourth deal, they're going to be a tier A, and they'll be qualifying for higher leverage and better pricing. And then, in terms of, if you get a whale on the line and they're going to be doing a lot of business, we also have loyalty pricing to the extent that they can commit to doing larger, commitment per year in terms of fix and flip. A lot of our guys do like 10 or 15 deals a month, and they've started out small, but as they get bigger, they start doing those fix and flips, and they do them really fast, and they do quite a bit of them. But the key is, if you contact me to do a loan, I'll send you, I have a canned email I send, it says, okay, tell me a little bit about your borrower. And it's going to ask you, how many fix and flips have they done? How many ground up constructions have they done? What's their real estate portfolio look like? Because in addition to actual experience flipping or building, we give them credit for being a real estate owner that, that's they've got some experience in terms of investment. And then I'll ask the credit score, their net worth, and their liquidity. We don't do any kind of income qualifying. We don't require tax returns. If you've had any experience dealing with bank, which I obviously have, they're always looking for deposits. We don't require any kind of deposits. Obviously, we're not a bank. We're not looking for a cash flow on the property or for the borrower. As long as they meet the minimum in terms of the credit score and the experience, and the net worth should be in the range of the loan amount. And the liquidity is usually going to be 10% of the loan amount. So if you've got multiple loans, obviously it would be more than 10%. But so that's kind of in a nutshell how the borrower would qualify. And our top tier in all of our products is 75% LTV. We can be more aggressive on the LTCs. On our fix and flip, we can go up to 100% of the LTC. And for those that don't know, LTC is loan to cost. That's the total cost of the project, including acquisition, construction, interest, all the fees, et cetera. we can finance up to 100% for our best borrowers who qualify from a loyalty, et cetera, standpoint.
Okay, so I guess in terms of that, so you, I guess real world scenario, you guys go out and find a house, that's a million bucks. Out of the gate, they're going to lend 750,000 on that project. With that being said, if you're able to get this property at 750, will Anchor Loans lend you that 750, or do they have to have any skin in the game?
Generally, we're going to do the lower, it's going to be based on the cost. So if the cost is lower than the value, then it'll be based on the cost.
Okay, cool. And then 100% loan to cost. And you and I went through this with my spreadsheet. So you're looking at these guys to go out there and line itemize out the exact expenses. And if they do have bids and whatnot, to provide those bids to you. What all are you looking for in that regard as far as loan to cost?
So there's usually it's the sales cycle on even a renovation or a construction can tend to be a little bit longer, and the reason is there's a lot of planning involved. So, initially I don't need all the detail. I just need to know what's your acquisition cost, what's your expected construction or renovation costs, and what do you expect the value to be when it's done, basically. And with that, I can get out an LOI and you can decide if this is something you want to pursue and do all the work to put together an application package. Once we get past that, then yes, we would be looking for a cost breakdown. And the reason we need the cost breakdown is because that's how we disperse the money on the back end. And the more granular you are, the better it is, the easier it is for you to get the money that you're looking for when because if you just give us $100,000 and say, I did this, this, and this, they might say, oh, that's only worth $5,000. And you might say, no, that cost me $10,000. It's like, well, if you've got a cost breakdown that shows what it's going to be, then they just pretty much give you the money if that item is complete. So granularity is on your side from an application standpoint, but we don't need that up front. As a matter of fact, a lot of times I'll have to encourage people to say, just give me the top line number so that we can get this thing started. Because it doesn't make a lot of sense to do all that work if it's not going to work for you.
And then you're probably going to hate me because this question is going to be pretty real for me at this moment. Is let's go and say you're in this project and your expenses are higher than you originally thought. How do you adjust that, or can you adjust that moving forward?
So what I like to do, and because I've been doing this for a long time, and I've also worked on the foreclosure side, so I know how bad it can be. I usually will strongly encourage that you build in a contingency and an interest reserve so that you've got a little bit of extra cushion in there. If there's a true blowout in terms of the budget, then the loan can be refinanced into a new loan, but that's obviously you're paying transaction costs. So it's always better. I always say if you've got room, especially in your value, it's always better to overestimate things and add a contingency and an interest reserve so that you've got plenty of room. Now, within the line items, if you overspend on something and underspend on something else, then there's a lot of flexibility in terms of moving things around. But it's like kind of Murphy's Law. If someone's asking for a line item change at the foundation stage, the next question is, well, wait a minute, where are you borrowing that from? Are you going to have enough money to finish the rest of the project if you're asking to move the line items around? So, I mean, it's usually much easier, and when I used to train asset managers, I used to say, if they're trying to move it from earlier on to the back end, I don't have a problem with that. But if they're trying to move it from, the back end to the front, that could raise concerns. And they might ask for bids, to confirm the amounts.
Yeah. So my street improvement bid when I got this done in 2022 was 250, and now it's 350.
Yeah.
So as opposed to funding this loan, should I rethink that and then go back to you and get new loan docs, or should I just try to pinch my pennies throughout this project to absorb that 100 grand?
I mean, we could take a look at it, but if the loan were closed, I'd say, suck it up and let's get this thing done and you'll get your money back when you liquidate.
Yeah.
If we can take a look at it. If that's truly the case and we don't have any extra room in that budget, then maybe we look at increasing it from there.
Okay. I hope I don't need that, but fund it myself if necessary.
But
So
that's one of the, and this is, and I'm sure you can vouch for this, Craig. One of the most important things from a construction or even a renovation standpoint is keeping the momentum going. Because as you slow down, very rarely is there good things that happen when you slow down. I mean, prices just go up always. I mean,
yeah.
Even if they shouldn't be going up, they still go up. You see on the news, oh, lumber futures are way down, and that's not what I'm hearing from the guys who are actually buying the lumber. That's because, it's the timing is all different. So my experience is, and that's, that construction, if you slow down or stop, that's a problem. So, we're very big on keeping things moving. And our disbursement process is very slick and clean, and money goes out very, very fast because that's how we make money, actually, getting money out the door. So, it's always best to keep things moving because if you let things drag out, it's not going to be better.
Now, really fast, and this might not have any bearing on anything, but you guys are owned by, I guess, Pretium. Am I saying that right?
Yes. Yes.
So Pretium has a bunch of different companies under their umbrella.
Yep.
Does that behoove us to, like, if we wanted to get licensed, I just deleted their page, but you guys have a DSCR lender that is a subprime lender. Is that better for us to get more companies under your big umbrella, or does Anchor operate separately or by themselves?
So there's a nuanced answer to that question. So, you can get signed up as a broker with Deep Haven, which is the DSCR
That's the
lender,
one,
and
yeah.
they're a top. I'm not sure exactly how top. They're definitely a top 10 DSCR lender in the country. And if you're going to do a significant volume, I would strongly recommend that. If you have one or two one-off, you can bring them to me and I'll push them through the process. I'm still ending up basically brokering it to them too. But you get the benefit of, me knowing, having done it and knowing what it's about. But like I said, if it's going to be a volume situation, I would strongly recommend that you get signed up with them, and work directly with them. That'll probably be best for everybody, except for me. I won't get paid for it, but that's okay.
But again, a volume play. We want to keep you in business, so that's why we have you here today. I mean, there's a bunch of different lenders out there that will do similar. In my, I guess, limited experience at this point, Anchor seems to be the best. But we have one question. Go ahead and read that.
Says Kyle asked, for a flip, it sounds like they'll lend 75 to 100% loan to cost, but could potentially lend 100% loan to cost plus construction costs. Did I hear that correctly? If so, are the construction costs funded upfront or on a milestone draw schedule?
Yeah, we could potentially do 100% of everything. So, what happens is in that case, we would be lending at 100% of the total cost. So including construction, everything.
And that's for somebody who you worked with in the past.
Yeah.
More of the loyalty program and
The tier A.
deals typically are you seeing them do before they're kind of offered that 100% loan to cost?
Yeah, tier A, I mean, it will go to 95 even without the quote unquote special deal. So, and that's for a standard renovation, generally, a relatively simple renovation. I have two closing today that I got the application 2 weeks ago, and we're financing 95% of those two transactions.
Awesome.
Yeah, I mean, I think that's a good intro. Aside from Kyle, are there any more questions that any of you guys have in this regard, or investment questions? Or I know we talked about DSCR loans last week, but if you guys have any questions on the DSCR loans that you guys didn't get to ask, or yeah, is there anybody else out there that has questions?
I got a couple questions for
Oh,
either
sure.
Craig and or Peter. Obviously, we have a ton of agents with Link, and this is mainly for our real estate agents. How do you recommend a brand new agent, or not a brand new agent, an agent who's established, but they're brand new on the investment side, really getting kind of their feet wet in investments and fix and flips? Do you recommend they partner with somebody like a Craig who's done it hundreds and hundreds of times? Do they go out and do it by themselves? Because kind of tying it back to wholesalers, we have our agents that are constantly trying to compete with wholesalers with these cash offers. And if they have a client that's in a pinch, they kind of feel helpless and they're like, yeah, well, I know you need to sell your house in 2 weeks or in a month. You should go take that cash offer. If they can be the ones that actually go in and buy it, do you recommend that? Do you recommend partnering with somebody?
Yeah,
How would you
let
get
me
it?
go ahead and jump in. Then I'll let Peter tackle this as well. But so if you guys are out there looking for your first deal, the easiest way to do it is just to go do it. If you find the right deal, you're going to find the money. If you have the right deal, you come to myself or Kobe. We can either fund it ourselves or work with someone like Peter. My entire career of my flip game has been all private money, and so this is using an institution for me is new. This is my first go with Peter and Anchor, and it was more of a again trial basis for me because I have limited funds, right? So my private funds are to a certain extent, exhausted because this project has crushed me. But with that being said, if you do have a single project that you have a question about, ask us. We'll be here to answer your questions, and then if it fits our needs, then we can either jump in or then go ahead and involve Peter. But Peter, do you have a different answer than that?
Yeah, I mean, it can help to partner with somebody, especially if they've kind of, they're able to rinse and repeat and they've done it. But otherwise, I mean, especially if you qualify on your own, then there's really no reason to pull someone else in. Sometimes, sometimes I've had situations where people pull in somebody and their credit score stinks, and it actually ends up messing up the deal.
Yeah.
So I would say, talk to Craig, talk to Kobe, talk to me, and I will. That's kind of my thing. I like to structure stuff, and so I really like to try and figure out a way to make things work, with what we've got. But if the answer is you need to go get somebody, then I would, tell you to go get somebody, and we can do it that way.
And I'm a big proponent of failing your way forward. So definitely try it on your own, and then have somebody, I guess, walk you through the process, because there is a lot of pitfalls when it comes to construction, whether it be not knowing how to get the bid, not knowing what to expect, not knowing timelines, not knowing what you don't know. And so in that regard, sure, if you have a solid contractor to run your job, awesome. I've always done my own jobs. And so I have a pretty good, I guess, background in that, and I can help steer you. But having a solid list of subcontractors or a main general, that would always be my advice if you're brand new. And then once you get your legs under you and you want to go owner builder, then by all means go for that. So not necessarily bringing somebody in to split in your I guess in your profit, but bring somebody in that knows how to run the construction job, because you don't want to get to the point where you're overbid or you're in a situation where you're, I guess, losing money, because that's never fun.
Well, and the other thing is that if you start small with standard renovations, literally, slapping some paint on and putting some landscaping, that can get your feet wet, and
Yeah,
you get to
yeah,
see
simple.
how that works. And it's lower risk. I mean, obviously lower reward, but it can be you can do quite well with that.
Yep, keep it simple. Yeah, what else?
Peter, what in kind of a general sense are some of the biggest mistakes you're seeing newer investors and or fix and flip people make? Is it missing a cost here? Is it underestimating the time? Or like the top 2 or 3 mistakes you see people typically make?
I mean, it definitely pays to do your homework up front. Don't assume that you're going to get the best price unless you've got the best price already. I would say if you don't have it, then, give yourself some cushion. The other thing that is the other side of it is being overly aggressive on the value, because on the fix and flip side, and even to some extent on the construction side, it's dependent on the value. I mean, we could do a high LTC, but if your value is not going to be there, you're not going to be able to get the financing that you need. And so I would say look at comps. When I'm looking at something, if someone says they're going to do it in this area, I'll do the zip code. I'll do Zillow or whatever, sort by house price and or sales price, and I'll look and see, if you're doing it in a market that's not got those values, then you're probably not going to be able to get that value at the end. I mean, by definition, we tend to be at the top of the market because we're making them the best in the area, whether it's ground up construction or renovation, but still, you don't want to be far ahead of everything that's out there because, those are your comps. I mean, even if we can finance it, they're going to be looking at your property and saying, "But wait a minute, I can get this house for this. Why would I pay for that one?"
Yeah, and this goes to also building the team around you. That we talk about building your team up, whether it be your escrow, your mortgage, your contractors, whoever it is, and using Peter as the example, because the more that you do with Anchor, the better pricing you're going to get. The more work that you do with your subs, the more loyalty you're going to get. You're going to get not favors, but you're going to get treated better with volume. And so if you have that ability to have that list of people that you stick with them. I mean, I've been using the same plumber and electrician for 20 years. I know I don't need to go out and get bids from these guys. I'm going to get the best pricing from these guys. To a certain extent, don't go in blind, because I have an idea of what things should cost. So you should want to know your costs, but I use the same people over and over because I know I'm going to get, the service. And if I have a problem, I pick up the phone and I can get it handled pretty quick. So build the team around you.
And it's not always just pricing, it's availability and willing to come work for you, because if they've got a bunch of jobs, you want to make sure you're the one they're coming to, not, someone who's paying a higher price potentially.
Yeah.
So,
Yeah. The one-off jobs, but yep. What else? Anybody else?
Yeah, we could open it up to some of the agent questions for everybody that's live. Question from Kyle. Peter, can you read these questions or don't read them? If you can.
I don't. Oh, is it in the Q&A section? Let's see. Wow, that's a good question. So, Anchor was acquired by Pretium about 3 years ago. Anchor has been in operation since 1998. We like to say that we're the OG of fix and flip lending. Our actual founder was a guy named Stephen Pollock. He was a poker player, and he needed a place to invest his winnings. So he started doing fix and flip for himself. And then as he started doing more, people started coming to him and saying they needed fix and flip money. So that's where Anchor Loans came from. He formed a company. They used to do fix and flip, and they used to do lending with Anchor Loans back in the pre-2000. Over time, it has grown steadily. One interesting fact is since 1998, they've never run a loss ever, which is pretty impressive. And some of our competitors out there haven't really gone through a downturn yet. And some of them, they have situations with capital, depending on what's going on in the market. We've never had that issue. And now with Pretium in the picture, they're literally, we've grown so much just in the 2 years that I've been here. We usually fund about 200 loans a month. And that ends up being, we're looking at doing over $3 billion this year. And so it's very, very busy, and volume continues to grow. And Pretium is a very hungry asset manager, because they're investing, they have investors that come in and invest in our loans and some of the other businesses that we have that Pretium has. So, and in terms of the volume, some people, they grow and grow and grow, and then they either stabilize or they start to go down. And I don't know if that's because of their success, that they don't, have the hunger to keep doing it, or if they can't manage the business once it gets to a certain size. But in general, most of our customers are doing more. And one thing that is interesting about today's market is some of the, major home builders are starting to pull back a little bit. I think it's a great opportunity for the small guys, because you can find the niches and the areas where there is value, And, it may not make sense for a big home builder to come in and buy, the ugliest house on the block, but for a fix and flip guy, that's the bread and butter. So I think it's a great opportunity, what's going on in the marketplace, because a lot of the other big investors are starting to pull back. And so that creates more opportunities for the littler guys.
Do you guys have any programs for buying at auction, or you have to buy cash and then refi with you guys?
Yeah, I mean, our bridge loan, you can do recap, so we can do a refi, cash out on if someone's already purchased a property. Obviously, you need to have an exit strategy, whether it's going to be fix and flip or sale. I'm doing a loan right now. They just signed the LOI, and I just got the application in this morning where they bid at a foreclosure sale, and they need to close, I think, by the middle of October. And we should have no problem getting that done.
And do you guys have any options for lines of credit, or do you have to have the property that the specific?
You do have to have the property, but it's kind of rinse and repeat. So if you know what you're doing, you just get like this guy, they'll get me the contract and we'll order the appraisal, and we can close. I mean, I don't like to advertise that we close in 2 weeks, but if we have to, we can.
Yep. Okay. Yeah, because mainly my trustee sales days at the courthouse steps, you have to have cash in hand, and so
Yep.
Yep. What's that?
10% cash or the full
100%. Yeah. And I started in 08 when I didn't know any better. We were literally bringing cash to the courthouse steps.
I'm talking to a big wholesaler right now where they're looking to, they're paying cash and they're looking to come back to me for we call it a recap bridge, where they get their money back until they figure out what they're going to do with it.
Yep. Okay.
Great question for you. So you've obviously done this a ton. Getting into it for the first time, was it kind of by chance? And how would you recommend a new agent going about getting their first investment?
It wasn't by chance, it was by necessity. So back when the market crashed in 08, I was either going to be out of the business or I had to figure out a new way to do things. And, it wasn't a slowdown. It was an absolute cliff. I'm sure, Peter lived through that too. He can attest. And so for me being a listing agent, I was like, holy shit, now what? And it started with short sales, and that was my first go-to. And then it was trustee sales. And so I ran that road till about 2013, 14, then big money came in and margins got too thin. So out of necessity, for me just to survive. And then from there, again, I used private money. And so it was an easy transition because we had a pretty quick track record, because our short sale game came out of the gate and we had some pretty good hits out of that. And then we filled that pipeline up until those rules changed and had to shift gears to trustee sales. And so I know you keep going back to the first deal. And so if you guys are interested in trying to figure out your first deal, go get it. Go get your first deal and then worry about the money later. If it's a good enough deal, we will find you the money. And so jump in with both feet and we'll figure out the details. It's probably not the wisest decision for someone that's listening as a lender, but yeah, find the deal and we'll find the money.
So you're saying go out and find a deal. Would you recommend cold calling, cold texting, cold
Yeah.
emailing, door knocking? Are you asking friends and family? Are you
No. So
other agents in the area?
yes, yeah, all that. So some of that and all that. So again, you guys are competing with wholesalers, and they are pounding the phones. They're calling the NODs, notice of sales. They're going directly to these sellers that are in either distress, or they're going to agents that have properties that they want to offload, either a probate sale, a divorce sale, where they're not too concerned about getting top dollar. They want out quickly. And so these wholesalers are coming in and they're kicking our ass in that regard. And so if you guys have the ability to pound those phones to these distressed sellers and then get in, because if you guys can get in at 75%, 80% of value, it's going to make your life a lot easier getting an anchor loan or getting, loans from our side. Now, again, when we were doing it, we were borrowing at about 80% loan to value for our cash investors, our private money. And so when we were buying these at auction, we were coming in with basically 100% financing, because we're buying them. So we're buying them right. And so you make your money on the buy side, buy the homes right, and the rest will take care of itself. So find those deals, whether they be agents or cold calls, or Kobe mentioned our text campaigns, email campaigns, letters. I don't care how you find them, but it's not by luck. You have to go out and be aggressive and get a hold. I mean, the phones are going to be your best friend, quickest deals, best ROI, all that.
Gotta kiss a lot of frogs.
Yeah, it's numbers game for sure. You're going to get kicked in the face a lot. You're going to get 99 no's for every yes, and so be prepared for that. People are losing their house, are already pissed off. They're getting called from every wholesale coach guru out there that's teaching the same thing. So you have to have options. So if we come at this game as an agent, you have a buffet of services, right? You have the ability to pay cash. Yes, our cash offer is going to suck and you don't want it. That's great. We can list it, try to get an investor in at a quick price, have the investor pay cash or wholesale or do whatever in that regard. Then we also have the anchor option, the fix and flip. We have the buy before you sell. You come in as an agent and have options where these wholesalers come in and they have, hey, we're going to come in and I know you're in a bad situation, so we're going to make it even worse for you. Here's a shitty offer. And then so that's our advantage on the agent side, is we have the ability to offer solutions and not just one low ball solution. So hopefully that makes sense. But I know that's counterintuitive. We're saying go out there and find these deals, but we have a fiduciary obligation where these wholesalers don't. No matter what, if we're acting as a buyer, we still have an obligation to that seller. We have to disclose. And I'm a big proponent of over disclosing, saying, Michelle, I get that you're in this position. Market value is this. Here's my plan. Put it in writing. As an agent, you're just held to a higher standard, whereas these wholesalers don't care. And so come at this with I guess what, knit gloves, however you say that term, cautiously as an agent. You don't want to come in and defraud anybody, because you're going to put yourself at liability, me at liability as your broker. This is not a get rich quick scheme by any means. So just be upfront and offer solutions. And if you're able to double end this deal, to double end it, don't even worry about buying it. Those deals will come. It's just a matter of how you acquire them. Don't be shady.
Mm-hmm.
Yeah. Was there a question there? I don't know.
How would you kind of get into it? And,
Yeah.
For any agents either that are live and or they're going to watch the recording after, if you guys are interested in running through different programs, looking at our text campaigns or email campaigns, we have RedX, we have Mojo Dialer, we have the emails and texts. We've done thousands of tests through what types of messaging is working and what's not. So if you guys are interested, obviously just reach out to Craig and myself. We could jump on a quick Zoom, run you through how we are trying to source deals. We work with wholesalers sometimes, investors sometimes. We know what they are doing. We have scripts for you guys. So if this is of interest to any of our agents, once again, just kind of jumping in with both feet, we will help you figure it out. We'll help you with financing. We'll help you source the deals or put in the SOPs in place to build this into kind of a business for you all.
Yeah. And that's it. So in closing, again, so use us as the resource. Again, we have our brokerage, obviously, that's who's on this call. We have our mortgage company who is approved with Anchor. We are approved with a bunch of different DSCR lenders. I just sent my email off for Deep Haven to get approved with them. We have our own escrow. And so again, use our services, allow the vertical to help you guys, help your sellers, help our clients, save money on their end. Yeah. So what's he saying?
I think that was accent.
I would just say, follow Anchor Loans on LinkedIn. They put out a lot of good educational information with regards to investments and fix and flip and ground up construction, in addition to just, waving their hat when we do good deals too. But there's a lot of good information. Sometimes I'll even download some of the documents and read them just because they've got an interesting take on something.
And we're going to go ahead and put your information in our chat, Peter, but do you want to just go ahead and give them your cell or your phone number and email?
Well, we have a couple of questions that are coming in. Andrew asks, when sourcing deals, should you only look off market, or are there any deals that are listed? What are the most important things you look for?
I mean, there's a lot of agents that will have deals either on market or off. If they are, it doesn't matter where you source them. A lot of wholesalers are going to agents and using agents. I mean, we have 250 of our own agents. So if our agents are here, they're on the front line. And so if they're getting deals, get these deals. If you have to go out of our brokerage to a different agent, go for it. sourcing them any way you can is, I guess, is the answer. Doesn't matter how you get them, just get them.
Yeah, I've talked to a few investors who are really going after properties that have been on the market for over like 120 days. So they'll set their MLS parameters as soon as that property's hit 120 days. They're just picking up the phone. They're calling the listing agent and asking kind of what's the situation. If the seller seems like they need to sell, they'll come in and write an offer. And if they say, hey, we're going to hold it as long as it takes to get the price we want, obviously not wasting their time with it. So going, like you said, notice of defaults, notice of sales, expires, but you can also go to the flip side, just properties that have been on the market for a long time. You never know kind of what the situation is, and building out the relationships never hurts.
Yeah, network with probate attorneys, network with divorce attorneys. I mean, ambulance chaser type, but you know what I mean? It's build these relationships, right? With financial advisors, CPAs, attorneys, you name it. Get out there and just get your face in front of these guys, understand what their game is, because a probate deal is different than an NOD, different than a standard sale. Just gotta have knowledge behind what you guys are doing, right? And so when you go to these sellers and you can just talk the talk and you know what you're saying, just do your homework on different types of sales.
We got a message from Vanessa who wants to take my listing. It's a great fix and flip.
Done. Let's go. There's your Andrew. There's your answer right there.
Vanessa, if you want to email me it, I'll include it in the notes after the show. Actually, or not the show. This
is a show. This is a show.
Whatever.
It's our show.
I'll send out in the email with everybody. See if anybody wants to buy it.
Cool. All right. Anything else, Peter?
No, what I can do is I'll send you a flyer that you can put out there. It's got my information on there. It's got some basics on what we can do. And yeah, anything you need, let me know.
Love it. All right, man. Thank you so much for joining. And I'll get that fire extinguisher up and get some insurance for you.
All right. Sounds great.
Thanks, Peter.
See you. Bye.